Here's how I'm framing the narrative going into the new month of August. So first things first, I noticed that we are going to have a monthly SMT inside of this monthly BISI, right? But we can see that ES has failed to even trade into this BISI, which is a sign that we could potentially revisit this low. So on the weekly now, I can see this divergence to a greater extent. I can also see that if I draw up from the low to the high of this swing, that we have yet to trade to discount, of which is not necessarily something we have to do in an expansion leg. As you can see, we've had this accumulate, manipulate lower, and distribute higher. We do, however, have more weekly unmitigated gaps in discount. So there is the potential that we come and revisit this still. Have a bit more of a However, the bullish displacement candle here is a sign that we may need to fill a little bit more of this suspension block over here. So now that brings us to this suspension block. So obviously this is a suspension block as we have a volume imbalance on both sides. One thing to note is that when I'm doing my analysis, I'm first going to sit on no BADJ and no set time frame. So you can't see it on the right here, but that's if I click on BADJ, it changes a little bit. And then if I add set, changes again. So we no longer have our suspension block here. So I'm going to use the one that is the cleanest in this case. And for me here, I see this to be a very clean suspension block. I like where these new day opening gaps are, where these new week opening gaps are. It's all very clean. The way we're expecting it is also clean. You can see inside of this new day opening gap, we trade to 0.5 of it right here and very cleanly trade away from. So one other thing to note is within this daily suspension block, you can see how on ES we swept Monday's high, which would be a daily SMT off of Friday's high to Monday's high inside of our daily suspension block. So that is further confirming the potential that we may need to revisit this low with the unmitigated end dog, 0.5 still lower, and a weekly unfilled just below us. So now on the 4 hour, starting from the low, we had an accumulate, manipulate into this monthly unfilled, creating these SMTs, and then distribute higher. So off this AMD, where are the potential points at which we reverse? So those would be this daily suspension block at which we have this daily SMT. B, our other potential would be off 2 weeks ago, previous week high. However, there are other high time frame SMTs, and even though it's low resistance liquidity here with failure swings on NQ, it's high resistance liquidity on ES, and we're already very diverged of this high. So you can see how we have this daily inside of the daily, right? And then we also have been putting in 4 hourly topside SMTs off this high, showing even further divergence. When you have what I would call stacked SMTs, that's a very good sign that we are going to potentially reverse or at least create some form of high time frame retracement. So in this case, we have this large distribution leg of which was mostly unmitigated. So we had very little retracement upon this swing. We can then also see that we have no SMT off this swing low, right? So this is not going to be a point of reversal to then take us back up into this daily SIBI, this daily suspension block. What may be a potential point of reversal is the fact that we have relative equal lows into a 4 hourly unmitigated BISI, right? So that would be my target for at least Monday and maybe Tuesday, is that we come and rebalance this swing trading into this 4 hourly BISI. If we were then to get further divergence here, then I would see the potential that we come back up and we run some of this liquidity. However, if we stay correlated with these high time frame SMTs up here, and we stay correlated and we start dumping and flushing through this BISI, then I see it is more probable that we'll run back to this unmitigated new day opening gap, of which you'll be able to see clearer on lower time frames, and maybe potentially to this weekly unmitigated gap, and then create further high time frame divergence, whereby eventually I believe that we will flip and then we will come back for all-time highs. But for now, as we are still in bearish order flow, I do believe the potential for a resweep of this low. So then going down to the hourly, it's all sort of telling me the same sort of thing, right? So that we have 1 drive, 2 drive, 3 drives into this 4 hourly SIBI, right? And putting in a high time frame SMT inside our suspension block, then creating a clear rejection block wick. So right, we had 1, 2, 3 drives with body closure over each high, or at least on a 15-minute time frame, we had body closure over each high. Then we had this stop hunt. So this stop hunt is then considered a prominent rejection block as it rated out all this liquidity and put in an SMT with this high right here. So at the time, ES had failed to even take this high. We then traded lower, then we re-diverged and swept this high on ES, showing clear uncorrelation and that we are most likely to trade back towards these lows, especially for the fact that there was no SMT even off these lows on a higher time frame. I can also see that we're trading inside of this hourly CIBI, right, which has a volume imbalance on this side. So if we draw this up with quadrants, you could see we are very cleanly respecting it. We are wicking above, but the bodies are closing within. And then we have displaced lower, inversing these other hourly CIBI, hourly BISIs. That's giving me a very clear draw of this low and this low to be my primary targets going into Monday. Draw up that hourly wick and then I scale down. You can see that we are even further respecting it. That hourly wick also aligns with this 15-minute BPR, right? If I draw up here from this buy side imbalance that got inversed and created a sell side imbalance, buy side inefficiency right here. So we had a bullish fair value gap, then overlapped by a bearish fair value gap. The area that is overlapping on both is our balanced price range. So you can see we trade up into the balanced price range, clearly respect NWOG. Then we trade up, raid that high, that's our smart money reversal inside of our BPR, inside of an hourly rejection block. Low resistance liquidity run below us, very clear draw. Then another thing that I'm looking at on the 15-minute time frame is you can see even clearer now that this is our unmitigated NDOG from Friday, right? So an unmitigated NDOG is going to be a prominent draw, but also the fact that this is a small accumulation range right here. We accumulated at the low rather than straight V shape. So we accumulated, we then left the range, we come back into the range or back into our 15-minute BISI that gapped us out, right? That'd be our low risk. We then distribute higher. We start inversing all of these PDRAs to the left. Right here, we have this retracement back into the 15-minute unmitigated gap, right? Whereas none of this through here. So none of this could be your first stage accumulation. This would be your first stage accumulation, at least on a 15-minute time frame, right? We then distribute. We have expansion, hard expansion off our first stage accumulation. Then we retrace back in. This is going to be our second stage reaccumulation. What do we trade back into? This is an hourly BISI right here. So even though I'm on the 15-minute time frame, you can see if I switch, it's an hourly BISI, right? Back down to the 15-minute time frame. You can also see that this whole leg right here, this is a breaker swing. So this whole swing, all these up close candles, then we have this down close candle, all these down close candles that run this liquidity. When we then close back over this series of down close candles, this is a breaker swing. So you can see the highest point of the breaker swing, if you just take the bodies, you could draw that up. You can see very clean respect off of that. You can also draw up from wick to wick, right? Those are your sort of options with breaker blocks, or even all the way down, encompassing the entire thing, right? But at this time of where we're trading to, this is the only point that is highly prominent to me, right? As it aligns with this hourly BISI and the 15-minute BISIs. It also aligns with this accumulation range before our manipulation and then distribution. So, right, going back to our market maker model, we had original consolidation, low risk, that's first, right here. Here would be our second stage reaccumulation. We then start trading away. This is going to be our second stage distribution, right? We then have one drive into this 4 hourly CIBI over here, right? Just above our NWOG. So we're filling our NWOG again from the start of the new week. We then have 1 drive, 2 drive, 3 drive, very prominent for reversal, right? Whereby we've closed over each of the highs. We then have down close, right? We then traded back off London low, but we were creating significant divergence, so that you can see we have this stop hunt right here. We have a very clear stop hunt to create this daily SMT and to run us into the daily suspension block. Off that, we then trade lower, and then you can see upon this retracement, ES needed to still run this liquidity over to the left. It needed to put in this daily SMT, which wasn't going to be in unless ES came and raided more liquidity, creating further divergence. So you can see upon this retracement swing, which if you also draw up optimal trade entry, you can see we very cleanly respect our BPR inside of the optimal trade entry between 0.62 and 0.705, and then we displace lower out of that. That would be confirming our smart money reversal off the high now, and then we offer our low risk inside of our 15-minute market maker sell model, and then we are gonna complete our first stage, second stage, and potentially run this original consolidation down here. However, the other points of reversal are the fact that this could be a lower time frame model, and we may reverse off this as a potential original consolidation for a 5-minute market maker model. So this is why you have to understand the fractal nature of price, is the fact that this could be a program now. We've had a flip of the program, and we would just be completing a smaller time frame model inside of our higher time frame model. So our higher time frame model might have flipped to a buy program, and we're not going to run this higher, and then we were going to continue higher, right? But if we are still in the sell program that we have been in, whereby we fulfill a lower time frame market maker model, but not the higher time frame with this LRL here, and then run lower, right? So that may be what we're going to continue to do here, whereby we ran this market maker model with ES sweeping the highs and NQ not, and then we're going to come back and fulfill this full 15-minute model. Make sure to leave a comment with any feedback or questions that you have. Be sure to join the Discord too. I'm in there actively answering any questions, doing trade reviews and such. And be sure to follow the Instagram too to keep up with my daily trades. But good luck with your trading this week, and enjoy.